To your point, Ben, though, I mean, you have investors still paying up for earnings, whether in the U.S. or here or in Europe as well. So at what point does the currency become a factor?
I think in
Europe.
In Europe, I think it's a huge headwind in Europe. I mean, we think the euro goes to 120. European corporates are, the most globalized. People are betting on a pretty big earnings recovery. I think any headwinds, and the euro is one of them. Bund yields is another one. Potential gradual fade from these very high European PMIs, I think, over the next 6 to 12 months is another one. I think we're being set up for actually earnings disappointment in Europe.
But let's go back to what poor Mario Draghi has to do, because at the Sintra speech, it was not a radical speech, it seemed like. He said things that I thought would be pretty obvious. Sooner or later, we're going to have to reduce some of the accommodation, and the markets reacted. You look at the Bund yield, you look at the euro, things like that. How can he say anything of any interest, even if it's the most obvious thing?
Yeah, he's trapped to a certain degree. But, Bund yields at close to zero is an extreme number. So, Bund yields are always going to move up. It's just a question of when and at what pace. So I think a lot of this has to do with market positioning. A lot of this has to do with investor expectations, which, I would argue have been somewhat misaligned.
I want to get to something that you just said a moment ago. We're set up for disappointment in the European equity market. There is a huge consensus bid going into Europe at the moment, starting to go into Europe in quite a significant way. Almost everyone that sits around this table, whether I ask them a question related to Europe or not, they'll try and get it in there. We want to buy Europe. How disappointed are they going to be?
Does that mean I get not to talk about Europe? No.
No, kind of.
I do.
So, I think European earnings are fine for this year, right? You're having the activity data is coming through, earnings are super depressed. Next year, I just think headwinds, stronger euro, sort of some fading growth, higher Bund yields, and I think Europe's a bit of a value trap. I mean, there's this narrative that 15 to 20% discount to the US. It doesn't really exist. I mean, it's just a mirage of a US equity market full of healthcare and tech, and Europe full of banks and industrials.